right, so let's get into it. Part 2, common blockchain terms. Take you over to the screen here. Let's see. We're back over here at CoinMarketCap. This is the Alexandria section. So in effect, let's take you here, CoinMarketCap. Link in the description below. And you go to Learn, Alexandria. Boom. You can start anywhere in here and get tons of information. Working with the glossary today. So we'll work with that. Boom, boom. Interesting day in crypto. Bitcoin going up. Let's go ahead and kill this, and this. And we're going to start with mining. Again, 2 things to get off. I'm going to start having to get myself into this. Number 1, I'm not a financial advisor. I'm not a legal advisor. And I'm not here to lead anybody one way or the other in the crypto or blockchain space. I'm simply put going to put out into the YouTube sphere as much information as I possibly can relating to blockchain and cryptocurrency, the journey therein. And I'm getting this part out of the way as my first few videos into this space to have it memorialized on my channel in a playlist called Tutorials, where anyone who comes across the channel in the future, hopefully when I have many more people following, which, by the way, please subscribe to this channel so I can get this thing out here as much as I can. Tell anybody who wants to know anything about cryptocurrency, please go to Luxitam's YouTube channel and subscribe, because I am going to be putting out real world, common sense folk like me that are getting into this space, been in this space, or people who want to get into this space, but there's questions that they have of comfortability, confusion, not a necessarily fully settled, established marketplace yet, or platforming of its technology yet. That's still a work in progress. And in the meantime, it's like the boats are rising, but the water's choppy. It will settle, not this year, not for a few more years, but now's the time to get in. So I'm full in, and I'm learning every single minute of the day. I'm learning more about this than I've learned about anything in my life. And for people that are coming into this space that want to have some place where they can go and say, give me the common sense, most direct piece of information to help me understand the most basic fundamentals of what the hell's going on here. And from there, go do your own research, find your own journey, and plow your own path. I'm not one of these guys that's going to tell you, this is the technical analysis on this chart about this cryptocurrency so you can do what I say and you'll make money. That is not what I'm doing. I am basically saying, in my journey of doing those kind of things, here are some of the roadblocks that I ran into that I had to go find out. So I'm going to bring that information to this channel's videos, and hopefully people can come across it, gain some very basic understanding of what they're dealing with, and then make informed decisions thereafter. And that's the impetus behind why I'm doing what I'm doing. Eventually, and not very far from today, I'm only going to be strictly focused on pretty much probably live streaming my technical analysis, charting, and what coins I'm invested in or investing in or currently playing with, if you will. I'm also going to be documenting my journey through the development stages of. I'm leaning towards the Cardano Foundation, or the Cardano platform. The coin symbol on that is ADA. It's one of the top 10 coins right now. Charles Hoskinson, the creator of Cardano, was one of the creators of Ethereum, branched off and did his own thing, and this is where we are today. So I'm very interested in his platform. From a development standpoint, I want to look into the Plutus language and all the things that they got going on over there. I'm also going to learn Solidity for Ethereum just to get it under my belt. I want to have the basics of the development chain, if you will, under my belt. But I'm going to be more driven and focused on the development side pretty soon, and the investment side, not the I'm some kind of an educator helping people outside, because I'm learning as well. So I don't think it's prudent for me to expose myself as somebody who is that, which I'm not, but I'm just trying to help anybody who comes across this space that needs to have the basics. And so I just wanted to clarify that. I'm not an advisor. I'm not an expert. I don't profess to be. I'm not that. What I am is just a common person who's trying to get information out there for people that may come across it by searching the algorithm and seeing me come up and, oh, they watch the video and there's these basic pieces of information that most people just glaze over and expect you to know day one. So that being said, not that there isn't a whole bunch of good educational sources out there, because there are way better than me. Find them and then send me links to them. So here's where we're going to start. Mining. We're going to leave. We're picking up where we left off on the last video, right before this one. So this is part 2. So let's go with this term right here. Mining, a process where blocks are added to a blockchain, verifying transactions. It is also the process through which new Bitcoin or some altcoins are created. So a mining operation in cryptocurrency is nothing more than basically, I'll be crude again, but very simple. Somebody's home PC or a little contraption, ASIC miners and all these other things out there. But you have like a little mining, it's like a graphics card on crack. So you basically have your computing processing power is solving algorithmic problems mathematically, if you will. That's kind of what mining is. So that it's your miner, your little computer miner is connected to the internet. I'm being very crude here, and I hope crypto people that are watching this, if they do, don't cringe, but I'm slashing it to make it simple for myself, basically, to explain. So basically you're saying, oh, there's a transaction, a transaction that just occurred. Dawn traded some Bitcoin, so this is a transaction. And then what the miners do is they get this request and they solve the algorithm and then send it back to wherever this is all going on. And boom, that's proof of the mining the transaction has been finished. And so the miner gets a little commission for doing that, using his or her power to do that, and it feeds the whole system. So basically a miner is picking the gold out of the cave and throwing it to whoever's dealing with the gold, and they're keeping a little piece of it for being the powerhouse behind the computing processing power. HODL, one of the biggest terms you're going to hear in all of cryptocurrency, period. End of conversation. It's a type of massive investment strategy where you hold an investment for a long period of time, regardless of any changes in the price or the markets. The term first became famous due to a typo made in a Bitcoin forum, and the term is now commonly expanded to stand for hold on for dear life. So in the blog, the guy said many, many years ago, instead of I'm holding Bitcoin, he spelled it, I'm hodling Bitcoin, just reverse the letters. And so now it's like a fun little term that the crypto community has decided to use to coin the phrase. HODL is to represent you're a holder of the coins you've bought. You don't sell. So I'm hodling Bitcoin to $250,000 per coin. It's sitting at $50,000, but I bought it at $40 a coin. But I'm hodling this thing all the way up. You're holding on to your coins. Fork in blockchain, not software. So a fork in blockchain or forks or chain splits create an alternative version of the blockchain, leaving two blockchains to run simultaneously. An example is Ethereum and Ethereum Classic, which was forked after the DAO hack. So here's Ethereum. Let's call it Ethereum Classic. When it was very first built, the code went out. Charles Hoskinson, Gavin Wood, Polkadot's founder, Charles Hoskinson's Cardano founder, Vitalik Buterin, Ethereum founder, with those two guys. He stayed. There's a whole bunch of others. But in any case, and Vitalik now runs it. So, okay, when they created the original Ethereum, then there were disputes on how do we go from here. And there was a split. Actually, I want to rewind that. That's not really why the split occurred. That was a different situation. But Ethereum is here, and then you have, let's fork it. So now you have, it's going this way and this way. So you have a fork, and Ethereum, the original, continues on its path. It doesn't stop, but they create an upgraded layer that goes this way, and they run simultaneously at the same time, and you can now invest in both. You can buy Ethereum Classic, or you can buy what's now called Ethereum. That's a fork. Address, a place where cryptocurrency can be sent to and from in the form of a string of letters and numbers. So basically, a wallet address, a location that is, an identifier about that long of jibber-jabbery numbers and letters. And so you have a Coinbase wallet address, okay? And that address is blah, 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 blah. Okay, and you tell somebody or another exchange where you're doing business, send the tokens to this address, and they will come in, boom, and land, and that address will hold the balance of whatever you just got sent to it. You can also send your coins out of that address, sent from this address to another address. Addresses are like bank accounts. Crude, but think of it that way. Private key, secret key. A piece of code generated an asymmetric key encryption process paired with a public key to be used in decrypting information hashed with the public key. So, how do I explain this? Probably best. There are several ways in which private keys are stored. The basic and most vulnerable method is the direct seed code, for instance, and then you can see right here. This is what a seed code looks like. Okay. How do I explain this? This is hard. I had this problem when I was looking over this. Whoever has access to a private key has absolute control over its corresponding wallet, access to the funds contained within, and can transfer or trade assets and use the account for their purposes. In my trailer video for this channel, there's literally a part where I have a little key being shown, and I have the words coming across that say, not your keys, not your crypto. Own your keys, own your crypto. If you don't own the keys to your cryptocurrency, to your wallets, then you don't. So basically, when you buy Bitcoin on Coinbase's exchange, they will then create a Bitcoin address for you. Now, the coins that you just bought are private keys that are stored in that address for you. If you choose to have those private keys or your tokens sent to your own private wallet offline, away from the exchange that you maintain, now those keys, those tokens are in your wallet. You control every single aspect of it. Nobody could ever find it or touch it unless you literally hand them your wallet. You're like I said before in a previous video, like a little SD card or a zip drive. If it's a soft wallet or a desktop wallet like Exodus, then that's a piece of software that sits on your computer, et cetera, et cetera. You have to have access to all that. So basically, the private key, or secret key, the private keys, that is the ultimate control of your currency, your coins. If somebody else is holding that for you, those keys for you in a wallet on their exchange, they're yours, but they have a hold of it. So if something happens over here, you're kind of out of luck if something does happen, because you're going to want to have that, because you know you're not going to take your device with your keys on it and go throw it in the trash. Anyway, it's basically a custody issue. Hard one to explain. Please go read on this and get better information than what I just tried to throw out of my mouth. But it is definitely one of the keys to the, no pun intended, the private keys are very important. Having custody of your own private keys is the safest way to go. It's also the scariest thing to kind of do because you're in total control. Exchanges. Cryptocurrency exchanges, sometimes called digital currency exchanges, are businesses that allow customers to trade cryptocurrencies for fiat money or other cryptocurrencies. Again, Coinbase, Bittrex, Kraken, Gemini, the Winklevoss twins, the guys that helped create Facebook, they own Gemini out in New York. Kraken's in Wyoming. One of the few bank regulated ones, which is really good for cryptocurrency in America so far. They're doing good, leading the way there. Kraken, Coinbase, obviously the largest in our country, Binance, all that stuff. So any of those exchanges, that's an exchange. Basically like E-Trade for stocks. Wallet. A cryptocurrency wallet is a secure digital wallet used to store, send, and receive digital currency, and are divided into two categories: hosted wallets and cold wallets. A hosted wallet, again, that comes back to Coinbase is where you did your transaction. You took money from your bank account, you deposited it into your Coinbase account online. Now Coinbase has 500 of your US dollars in the exchange under your account. You take that $500, you go to the open market, you buy $500 worth of Bitcoin. Boom. The Bitcoins come into Coinbase. Coinbase has custody of those keys for you. Back to the private keys, your coins. And they create a Bitcoin address for you, which is being held in their exchange wallet for you. If you take those now and move them to an offline wallet like a Trezor or an EliPal or a I always get this so wrong, a Ledger Nano X, or a desktop wallet, a software wallet, now you're in possession of the keys in your own offline cold wallet. Cold meaning it's not connected to the internet. A hot wallet or a warm wallet is connected to the internet. So Hot means it can get tampered with. Cold, it's off and away from data breaches and whatnot. Fungible. This is interesting. In cryptocurrency, fungibility is when a coin or token can be replaced by another identical coin or token. I read through this a couple times, and this was the best way I would want you to see this. When a fungible good is given a serial number or other identifying marks, it could no longer be fungible going forward. So for the sake of this example, if you added numbers to a gold bar, it would become distinguishable when compared to another gold bar. So for example, if I bought a gold bar, an ounce of gold, and another ounce of gold, and I had two gold bars in front of me and they were both exactly the same, no markings on them whatsoever, to whomever would take them out of your hand and receive them for value, there would be no difference. It would be about the weight. So the in and of itself, it's just this amount of gold and this amount of gold. As soon as you etch a number into the gold, that now becomes a distinguished piece of value that can no longer be mixed with something that isn't marked. It's now a non-fungible value. This is very important for technologies in crypto because you have what's called NFTs, non-fungible tokens. The NFT marketplace is exploding right now, especially with Topps baseball cards. My brother's even getting into that. They're coming in hot and heavy with this. So just think of this. You have a baseball card. You're playing baseball cards on the floor with your buddies. Boom, boom. Look, I got this one. I got this one. Okay, and you look on the back and it's got a serial number on it. That baseball card is identified. You go and have it checked out to see what its value is. And it gets a serial number. Now, that is a non-fungible baseball card. It can no longer be mixed in with things that are identical to it because it's no longer the same as everything else because it has its own unique identifier. In cryptocurrency, that's very important because if somebody sells one of 3 cryptocurrencies with a basketball player on it or something like that, then you have a serial numbered non-fungible token that represents the GIF or the image that you just purchased that a collector may want, and they're going to say, you know, I want the one of 3, but you can now identify it. So one Bitcoin in my wallet versus the other Bitcoin in my wallet, and let's say I had 2 Bitcoin, they both sell for the same amount of money on the open market because they're indistinguishable. There's no distinguishing mark on my private keys other than the fact that it's one of the same thing. Versus this is its own unique token or representation of something in token form. Non-fungible tokens. Getting to that soon. Going to be huge. Now, real quick, I just wanted to wrap up these last terms. Again, I've gone through the list pretty much of the ones that basically people would want to know. Over time, as this video gets made and some people watch this video over time, I believe this will be just good to have well, what is he talking about? Let me go get this information from CoinMarketCap and let me read up on some of these terms so I get it under my belt. I'm basically highlighting what the most used terms are in this space by people every day, and they do not take the time to sit you down and explain to you what they mean when they say it. It's going to be a very fast conversation, something like, yeah, so the other day I was investing in NFTs and I went over to my hard wallet, let's say, I transferred, 6 Bitcoin to buy a whole bunch of NFTs out of my Trezor. Well, if you have no idea what a Trezor is or what this is or what that, there's no way to know what that means. And so I came across that. You're entering a conversation that's already been going on and they don't wait for you to catch up. And so I'm just doing the best I can to try to give you some very basic jump off points for you to then start your journey. Other than that, be looking out for, in effect, let me take a look here and see what I have on the slate, if you will. I'm going to be moving into the development part of this now. And I'm not sure exactly how I'm going to bring that to a YouTube video channel, probably live stream or overhead screen caps of me doing the development side. So I'm going to have to be careful with that because it could be a lot of dead space in there, of dead time. So I might just stream it and just say, hey, look, pull up, have a seat, get a cup of coffee. If you're a developer or you're somebody who's interested in the investment side of this, kind of have like jam sessions of investing 3 nights a week or something like that. I do it every single day at some level, but maybe 3 nights a week or 3 days a week. I'm not sure exactly what time I would do it. Probably in the evening time, maybe. I don't know. Depends on the markets when they open in different parts of the world. For instance, I like to play with the Asian market from, let's say, 10 o'clock at night till 4 in the morning. I like to play with the Western world market between 8 a.m. and 5 p.m., the normal operating hours, if you will, and a little bit into the evening. The Asian market's overnight, our time in America. So probably within the next couple weeks, I'll get that nailed down, but I'll be bringing out some more videos on some very basic, fundamental, different parts of doing things within, like how do I set up my accounts? What are the best ones to use? What exchanges should I go to first in America? What are the rules about all this stuff? How do I deal with it? What are the tax implications? What are the safest ones to use? I'll start exposing what technology I use. I'll start exposing what exchanges I use. I'll start showing the process of signing up for these things. I'll have to do some dummy accounts because all mine are already established. So I'm going to get that all set up and just try to throw out some titled videos for people to come across over time. Hey, how do I set up a Coinbase account? Boom. And if you find my video, I want it to be very ABC 1, 2, 3, boom, done, out. So thanks for watching. I hope these jump off points help you out. See you in the next one. In the meantime, have a good weekend.